Welcome to Share Talk, the only podcast where investors come first.
Hello and welcome to Share Talk. Today I'm joined by Shaun Richards from Not a Yes Man Economics. How are you today, Shaun?
I'm good, thank you. Yourself?
I'm very well. We haven't spoken for quite a while. You are probably the only economist I do speak to or have spoken to or actually like speaking to, which says a lot about economics, I suppose. It also says a lot about I only had 6 weeks at the LSE studying economics, and I think I missed out. Maybe you spent a bit more time there, I'm not sure.
3 years, actually, yeah.
You did the whole stint, did you?
I did indeed, and actually, in many respects, I enjoyed it. It got me a job in the city, not really quite by the routes you might expect. I went to Phillips and Drew, for anyone listening to this who may remember the name, and they gave me the grilling of my life. And I sort of crawled out there, and then they went, "Oh, do you want a job?" So I suppose I must have got something right, or at least showed that I could handle pressure, whichever or both.
Right. Okay. Well, I mean, that was presumably before 2008, and I think economics, as we know it, changed totally after that time. You would have thought that, let's say, with interest rates at zero, you would have massive inflation, and for some reason, we don't have massive inflation. Is there any reason for that?
We do in some areas, Zach. For example, house prices. You know, the number that's fresh in my mind happens to be from the US rather than the UK. But yesterday, house price growth was 7%. Now, how does that go with economies that, if not collapsing, have had a really bad year? It just simply doesn't.
So I mean, I think that ties in with the news today about the RPI being rejigged.
Yeah. One of the things they want to take out of it is house prices. Why? Because they rise too fast and give too high a number. They don't want that at all. What they want to do is to say to you, house prices have gone up, you're better off. They don't want the other side of the coin, which is, what about first-time buyers having to forever pay more? And this, if you look different parts of the country, obviously, at different levels, but in London in particular, everything's unaffordable, yet they want you to think there's no inflation. I mean, it's the biggest thing people buy, isn't it? You know, in terms of value in their lives, what's the most they ever spend on? If someone buys, it's a house or flat or whatever. So let's get that out the index because it rises too fast. That's the message they're sending out today.
So what's going to happen with this? So they're just going to get rid of it, or they're going to fiddle the figures, the RPI figures, or the CPIH figure, or make up a new one? What's the?
Well, I've been spending the best part of the last decade arguing with them over scrapping the RPI. I think over that, they've finally admitted they've got no case. So they're actually keeping it in name only and bringing something else in. So I'm not sure how you put this. I don't know, the football was on last night, you know, switching Liverpool to Everton or something like that. I'm being a bit harsh on Everton here, but something that's not as good. And that's their plan. So they'll keep the same name, but underneath it will be a set of numbers that going forwards are lower, which is what they want.
But why not just bite the bullet and say, look, from now on, everybody's pension will be rising by 2% a year, can't, you know, because of COVID or whatever it is. That's what it's going to be. The RPI might be higher or lower, but you know that's tough luck, and that's the new reality. Why not go for that approach, or would that be too sensible?
That'd be some element of the truth, wouldn't it?
Yeah, well, that was so. Obviously, that was a stupid idea. I wish I hadn't thought of that.
There's no chance of them doing that, and you know it's a shame. There are research going on trying to measure inflation properly. I expect them to neuter that too, because it's not what they want. Fans of the series Yes, Prime Minister, or remember, and I think I looked the episode up, I think this is 1983, so this is going on forever. And the then Prime Minister, Jim Hacker, this is all apocryphal or fiction, of course, turns around and says, but nobody believes the unemployment numbers. So, you know, it's been the same game. That was nearly 40 years ago now. And that's always their objective, to try and claim they're covering something, but in fact, to give a number that's different.
All right. Well, I mean, one of the reasons I wanted to talk to you again, because there's so many questions which have arisen since we last spoke, which is 2 or 3 years ago. One, which probably there's not enough time today for the whole day to answer, but the pressing issues at the moment, we've got furlough, how do we get out of it? We've got QE, how do we get out of it? And we'll have massive unemployment numbers once furlough ends, if it ends. How do we get out of that? I mean, nothing too difficult.
is the easiest. They have no intention of getting out of it. So we can.
So is it furlough forever?
Well, it's QE forever. And then furlough just follows on from the lockdown, doesn't it? The problem with the lockdown plans is, this is back to something we used to discuss. You're just kicking the can forwards because, okay, you stop it for now. What about next month or the month after? So therefore, they need furlough again. So it's the same trap until something changes. So, for example, vaccines that worked would be a change, and we could then move on, hopefully. What was your third question? Sorry, I've forgotten that one.
I think it was a furlough. How do we get out of furlough? How do we get out of QE? And how do we deal with the unemployment after furlough?
Well, that's a much deeper thing, because there have been issues in my lifetime, where these things have taken the best part of a decade to sort it out. A more optimistic view is that, let's say around 2013, when we saw some economic growth, those of some of you may follow Bank of England Governor Mark Carney then, he got his numbers all wrong, and this was a good thing because unemployment fell very quickly. So that's the optimistic side, that maybe we could do that again. The other side is we see something like, say, the 1980s. It was on TV the other night. If anyone remembers the series Boys from the Black Stuff, the point of that was the misery of long-term unemployment. And if we get stuck in that, that's the more miserable side.
But on the positive side, let's say the vaccines work, because even if 90% of people, these vaccines, I think 90% has a success rate on them. But I suppose even if you get COVID, 90% of people are okay after getting COVID as well. So let's say that the vaccines will work, because they would work anyway. So by March, we're sort of back to normal. The furlough ends, and everyone who's lost their job gets their job relatively quickly. We just have a 500 billion hole in our in the government's wallet, and that's a result of 1 year of pandemic. Is that? That wouldn't be too bad. We can gradually pay it off. Well,
again, but they don't have any intention of paying off. This is back to your question of the Bank of England and QE. They'll just buy the lot. Now, there's a lot of numbers thrown around in this. The actual amount they've done so far, as of yesterday, is approximately 708 billion. And they'll just raise that amount to cover the difference. So the UK can borrow cheaply. At the very short end, we're actually paid to borrow. As insane as that sounds, that's true. And even if we go the furthest out, it's only 0.75%. So for the time being, it's cheap. We can do it. In fact, in spite of all the extra borrowing, we're paying less each month on it, because it's got cheaper faster than the amount's gone up relatively. So that's okay. The problem is that we're in now a situation whereby, well, for example, how can we ever raise interest rates? Because if we did, we then wouldn't be able to afford it. So it's back to why I said that they'll just do QE forever until there's some sort of blow up, because there's no other way out.
All right, and then finally, just because that might be something which comes up, raising taxes. He doesn't really need to raise taxes, does he?
Well, no, and also there's the undercut of if he can. Times that governments have tried to raise taxes have caused a lot of trouble. People might remember the thing where he tried to adjust self-employed national insurance. This was Philip Hammond, the previous chancellor, and that led to all sorts of things. And a U-turn was the thing. An area I cover because I work there, Japan, they raised the consumption tax last year. So they've done this twice now, 2014, last year. Each time they've collapsed the economy. In a way, for Japan, COVID, now don't misunderstand me, I don't mean the deaths, I mean the economic bit, has been a relief because it's covered up that again. They're struggling to raise taxes. So that is a genuine problem. That is, across the sort of Western democracies, assuming you still think we're a democracy, struggling to raise taxes. It is a problem. So how are they going to do that?
But the pandemic's shown us that rather than raising taxes, just get the government to borrow more, and you can keep taxes relatively low.
Yeah, that can work for a while.
The new economic law.
Well, like MNT, some argue that it can go on forever. I don't believe that. One of the flaws of equations in economics always look like they have to be true, is that they always break down. And then all those that presented it scuttle for the sidelines and you never see them again. It is an issue. In terms of taxes, though, that is a problem with the modern era. raising them proves a lot harder than people think. So, like, say, they've been looking at capital gains tax recently. Look at them washer stuff saying you can't do that. And that's the problem.
Well, I think for many people, just having some capital gains to tax would be
that'd be a start, obviously.
A nice problem to have. But anyway, on that note, Shaun Richards from Not a Yes Man Economics, great to catch up again, and hopefully we'll catch up again soon when there's something else to throw stones at, I think probably is the right term.
A pleasure.
Thank you.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.